I'm Lee Brown, and I am your unscripted realtor style, thinks off the cuff co host of Under All is the Land podcast with my co host and little Mr. Needs to Have a Process Map, Rob Hahn, who seems to think that scripts are good, and I wildly disagree. So good to
Yeah,
see you back, Rob.
great to see you, Lee. And correct me if I'm wrong, but aren't realtors all about scripts? Aren't you guys all about scripting and,
No, we talk about scripts. Using them is something entirely different, just like every other business plan that realtors have ever had.
That's an excellent point. Well, thank you. And I see that literally our view counts are going up as we sit here recording. So,
We went from 38 to 39, so we are obviously
that's right.
just taking off like wildfire.
45. We're up to 45 now.
Oh, okay. So we're like the cigarette butt on the side of the highway that it just smolders for a while until it burns
Yeah.
everything down.
I mean,
Actually,
look,
we don't want to burn it down. We want to make it better. We're a controlled burn. That's what we are, Rob. We're the controlled burn podcast.
yeah, I like that because
Because fire's good. I'm going to write that down, actually, because I should have thought of that earlier. Hey, Sonny Hahn, why didn't you think of that? All right, speaking of people in the background who are failing us.
so, like we mentioned, I think our objective is to have conversations about a variety of topics that affect the real estate industry, affect housing, but from a very particular point of view, right? So today's topic, where and in our pre-show you were mentioning, you are right, I'm wrong, and I just need to come around to it.
I just said you're not right yet, so I didn't really say you're wrong because
maybe you'll convince me, but like I said,
I might.
the key issue here, I think, is this, that we're going to approach the arguments from a particular point of view, which is that realtors are patriots, that NAR was founded as a patriotic organization with the interests of the nation and its citizen at its core. That's the big why. So typically when people talk about these types of issues, it's all around like housing market, client needs, whatever, right? Without it being amplified up to that big why. So that's our goal. And I'm the hope I think I have is that we might inspire others who are listening, the 45 who listen, to go and start having conversations like this, right? To say, you know what? Whatever the issue is, zoning laws, mortgages, flood insurance, private listings, whatever it is, to look at it from the angle of what is in the best interest of the nation and its citizens, right? What is my patriotic duty sort of convince me that I should be thinking about? So with that said, the topic is mortgages. So let's start off by being somewhat specific about this, right? Are 30-year mortgages good for the nation and its citizens?
I say yes, and you say?
I say it's questionable.
Okay, well, okay, I can agree on questionable simply from the perspective of I don't like debt. Debt is what destroys people faster than infidelity, gossip, or any other thing on the planet because it weighs you down. However, I do think there's debt that's better than other debt, and I think mortgage debt is not necessarily bad debt.
Okay, so I think you're going to present kind of the conventional thinking around mortgages today, right?
I'm wearing pearls. I'm very conventional.
Exactly. So why do you think mortgages are good for the nation and its citizens?
Because in the current monetary environment, and we can pick that apart later if you want to, but in our current monetary environment, the only way for a regular person, as in blue collar worker, hourly worker, mid range earner, the only way they get access to property ownership is through a mortgage because the idea of coming up with, in some markets, $350,000 for a starter home. In other markets, $120,000. So of course, it varies based on geography, but so do wages.
Mm-hmm.
The only way they get into ownership is through a 30-year mortgage because it makes it affordable. If you don't have a 30-year mortgage in today's monetary climate, the only people who would own real estate are hedge funds, BlackRock, Wall Street, and the uber wealthy. I wouldn't own anything if not for the 30-year mortgage.
Okay. So I think that's the way that most people think about it, Right. And I think it's fair to say that for NAR and for all realtors, like the 30-year mortgage is one of the holy grails, right? Like mortgage interest deduction is another one that's a separate topic. But clearly the 30-year mortgage is super important because of, like you said, it makes housing more affordable. All right. So here's the counterfacts. Why I start wondering, is this actually good for the nation, right? It isn't as if other Western countries don't have home ownership. Like Germans own their homes, Brits own their homes. No other country on the face of the planet has a 30-year fixed rate mortgage. And yet people still buy homes, right? So there is a question to be had about that, right? Like home ownership rates in the US are dropping. They're not increasing, they're falling.
What is the home ownership rate in Germany? Question mark. Because if we're going to talk rates of home ownership, NAR only talks about the US home ownership rate. So I'm just super curious while we're
That's an
talking,
excellent
and
point.
obviously I need to know. The home ownership rate in Germany is relatively low by European standards. As of 2024, 47.2%,
Yep.
a high of 49.5% in
Yep.
20 and 21.
Yep.
How about Great Britain? Question mark. Because we're always comparing ourselves to Great Britain, and I'm not just going to use England. I'm going to use all of
Yep.
the beautiful
Yep.
countries there. In Great Britain, the homeownership rate is significantly higher. Okay, fine. In 2023, the UK's homeownership rate was about 64.5%.
Right.
In London, it's lower than anywhere else,
Of course.
probably because of price.
Right.
And okay, fine. So they're closer to us. Germany's way below us,
Right.
but Germany's got a broken government right now. So that's a whole different
Look,
conversation. You gyppies can tune into that. It's all
and here's
broken.
the thing. This what makes my position slightly weaker is it isn't as if housing is affordable in other countries. Right. Housing is unaffordable across the West. You know what I'm saying? It just is. And a big part of it is the fiat money
Well, we
system
talked
that you
about it,
kind of touched
and well,
on,
we also
right?
talked about it in the last episode. It's out of control because our demand side is out of control because people
Sure.
are flooding in who are receiving housing and benefits that
Yep.
the natives don't receive. That's a whole different conversation. But yes, fiat money. So if you want to start talking inflation, I'm going to talk fiat versus gold standard
We
because
could
that's
start
where you're
talking
going.
about that. No, it's not even that. So, I mean, obviously, this was not something I questioned ever myself either. I'm like, the 30-year mortgage is the foundation of the American dream, right? It's what makes everything possible
It gets
almost,
people
right?
in. Like, I look at it as it's the entry point. Now, granted, I tell people all the time, your plan should be to pay this off so that you're not paying for it for
Right,
30 years.
right.
And there's so many ways to calculate your dollars to do that. But then we're going to go down the rabbit hole of how you don't actually own it then anyway, but that's a different
That's a
half of the
different conversation, right?
conversation.
So, what kind of started changing my mind was a very specific economist that I heard, and I wrote about on Notorious Rob, right? It's Dr. Richard Werner. He's an economist. I think he's out of Europe, but he came to fame because he was a working banker. He was like a banking economist. He wasn't just an academic economist in Japan during the Japanese bubble and its collapse. And he has a very particular theory, which seems right to me, right? And there's some disagreement among economists about that. So his whole basic theory is we live in a fiat money system, right? Like we mentioned, and economists don't understand how banks work, right? And therefore, the rest of us actually don't really know how banks work. What his whole theory is that banks create money through lending, right? So his whole thing is like inflation is actually not caused by government borrowing. Inflation is caused by banks lending for consumer consumption, for consumer spending, right? So like credit cards would be the best example, right? Like I don't know the last time I went to a grocery store and paid cash or pulled out a checkbook. I still kind of remember that from when I was young. Like these housewives would pull out their checkbooks at the grocery store.
That's this woman. I'm
Uh,
the housewife who pays with my checkbook.
okay,
And it's horrifying to the little cashiers from high school. They're like,
right. What is this? Right,
what are we going to do with this?
right. It's from like as long as whatever I remember, it's like you walk up to that little pad and then you insert your credit card, you tap it or
Or
whatever,
tap.
or swipe or whatever, right? But I remember, and I guess you used to, and maybe you still do, like pull out a paper checkbook and write a check to the grocery store. Like,
It's in my pocketbook right now because that makes me pay attention to the
hmm
dollars in my account
hmm
because I know my dollars are finite.
sure,
And what the credit card systems created and the banks
that's right.
created was a system that is infinite because there are false dollars that are created, which is
That's right.
inflation. It is
That's
too
right.
many dollars
That's right.
competing for the same number of goods.
That's
And
right.
so, for anybody watching this who never has got a grasp on inflation, if
Right.
you keep putting more dollars into the marketplace, but the goods stay the same, more
That's right.
dollars are chasing fewer goods. That's why everything's more expensive.
That's exactly right. Now, so the second leg of his theory is Rick, is that this the one that really impacts us. His theory basically is if banks lend money for people to engage in asset purchases, whether that's stocks, bonds, or real estate, then what it does is it causes asset price appreciation. Again, makes perfect sense, right? If you're creating new money, new dollars to go after real assets, then the price of those assets have to go up. And I think that's effectively what we're in. That the fact that the 30-year mortgage is created by the federal government, right? Maybe with good intent, by the way. This is a New Deal era program, right? Said, hey, we need to encourage American home ownership, right?
That's a different episode too. You mean the
Exactly, but
communist era of New Deal?
exactly. So they said, okay, we're going to make it easier. We're going to subsidize, the 30-year mortgage, et cetera, and then home ownership exploded, right? I mean, I think that's the history. Well, if Werner is correct, that all it's doing is just keep pushing home prices higher, right? The existence of the 30-year fixed rate mortgage, yes, it makes homes more affordable if you can get into one. But what it's effectively doing is just pushing home prices higher. Is
Well,
that
I
the
mean,
only
you
reason?
could say the same thing about anything that makes homeownership more attainable is going to drive the prices up. For example, the artificially low interest rates from 2008 to 2021, that was artificially cheap money,
That's right.
which did cause a run up in the market that was exacerbated by the stay-at-home orders during
That's right.
COVID. So you have that, what drove the prices up was the inexpensive money. And so I have warned a lot of buyers about that here recently. Should rates get artificially lowered to any number below 6, really,
hmm
because historically 6.5 over the last 45 years, where it averages out, because that's a reasonable churn rate of money. It's what interest rates, the churn rate of money.
Right.
If it goes artificially low, you're going to have bidding wars again. Bidding wars drive the cost of housing up. And so you can either buy now and negotiate a little with your higher interest rate, or wait for your rate to go down and bid with other people and pay
That's
too
right.
much. And so you're right that there are inflationary practices. The 30-year fix is part of that. Now I'll grant you this. There's a lot of realtors out there that I follow on the social space who are rumbling about how they wish there were a 40-year fixed mortgage.
Right. Right. Right.
That's crazy.
It's
If we
it's
add a
insane.
40-year, it drives it up. In fact, my car dealer, so my car got totaled a month ago by a 16-year-old. Good times. I had to go buy a car, and my car was paid off. I don't like debt. And I'm thinking, "Ugh, I'm going to have to get a note here for a minute while I figure out the new
hmm
car. Holy
Yeah.
crap." And
Yeah.
they're like, I'm thinking a 5-year note is normal. 5-year used to be the long note.
That's
Now
right.
there's 6, 7, 8, 9. And
That's
my
right.
guy's like, there'll be a 10-year soon. I'm like, are you
That's
freaking
right.
kidding me? A 10-year note
That's
on a
right.
depreciating asset that devalues the minute I drive it off the lot. And my real estate brain kicks in and says, at least your real estate tends to appreciate over time as opposed to that car, which depreciates.
That's right.
And I realize that's part of the real estate argument, but it is true. But then again, if I think like you're thinking here, if you take away the inflationary
Pressure.
aspect of mortgages, then that house may not appreciate over time. So
Bingo.
is everything being held up artificially? Well, I think the stock markets are, so I guess housing
For
is
sure.
too. But what's
For
the answer?
sure.
You have to let it deflate? How do we deflate it
Essentially,
without harming people?
if you essentially eliminate mortgages, or at least a guaranteed government subsidy. In other words, look, mortgage lending has its place, right? And this is what I was so conflicted when I wrote that, and I'm trying to understand it, right? Because to your point, even if okay, you know what? Let's approach it a little bit differently. what is the measure of affordability? Like when do we say a house or a housing market is affordable, right? For as long as I have lived, the number was 3. It's income to price ratio, right? And for as long as I've lived, and whether it's Fannie, Freddie, HUD, you know, academic textbooks, everyone's like, look, 3 to 1. If the price to home is no more than 3 times the income, that's affordable, right? Because then you end up spending roughly 25% of your income on housing costs, 30%, whatever it is. They always said 3 to 1, right? Now I think the American median average is around 5, right? And it wasn't like even 10 years ago, people were pointing to markets like Vancouver, Canada, or San Francisco saying the price to income ratio is like 6, 7. This is beyond like hyper unaffordable. No one can afford to buy except the billionaires and the hedge funds. And I'm like,
And the foreign
right.
money can
And the
buy
foreign
too.
money. Right. So that's the issue. How do we get things 3 to 1? Well, there are 2 ways that you can do this without destroying everybody, right? One is increase supply. And I think that's been kind of NAR's answer. The other
To
one
everything.
is increase income, like real income, not inflationary income, like real inflation adjusted income, which the
Oh, so like abolish the income tax. That would do it.
abolish income tax, maybe move away from fiat money. There's like all these economic things out there. One of the most fascinating ones I saw was if you looked at what someone was making in 1940, the median income, right, of an American worker in 1940, and if that person was paid in gold coins, right, that person makes more than what a median American worker makes today in gold coins. Right. So in absolute real terms, the American worker has been utterly eviscerated. And there are lots of reasons, right? It's the fiat money, it's the shipping of jobs overseas, it's all of those things, right? But at the same time, because we have mortgage lending and we have the 30-year rate and all of that, home prices just kept doing this, right?
Well, then it got tied to taxes years ago
That's
because
right.
I've defended the mortgage interest as the one really good tax deduction property owners get.
Right.
And it has been, and traditionally it is the reason property owners get a refund at some point, but taxing is a whole different
Right.
conversation. But
Right.
it has been treated as good debt from a taxation standpoint too.
Right.
And when people want to push back on that, it tends to come from tenant quarters because it's
That's
the
right.
benefit they don't get, and they don't
That's
want
right.
anybody to have something they don't have. But it's all pressure on the same dollars.
That's right.
But now we've
And
mentioned
pressure
fiat a
on the
couple of times.
asset, right?
Well, we shouldn't assume that our audience knows what fiat money is. That's your
Sure.
fake dollar bills, y'all. We had the gold standard everything had to be backed by gold
Right.
until Nixon took us off of that in the 70s.
That's
So
right.
until you understand that your dollar bill is not backed by anything, then you start to realize that this is why the founding fathers and the Federalist Papers did not want a central bank. And
Right.
they fought it for years and years and years until it
Right.
finally crept in.
Right.
So you need to do some research on monetary policy to do
That's right.
real estate, to be honest, because you need to
That's right.
understand the players. But at the end of the day, if you take away the ability for people to have real estate, we're also taking away the one asset that they can live in. So I also can defend the 30-year fix
Mhm.
because I don't want you to take a 30-year mortgage on a car because you can't
That's right.
live in it. We shouldn't live in it. People
That's
do.
right.
You shouldn't live in your car. You shouldn't do a 30-year fixed for gold because gold is an asset, but could you use it for your
Right. Right.
house?
You can't
If
live
you
in it.
don't, you're paying rent to somebody. So it's not necessarily, it's not evil.
So it's one of these things where I feel like maybe there was a time and a place for it, right? But stand like where we are now in 2025, and the biggest problem that the nation faces right now is housing affordability, especially for the younger generations. I think now we have to question it, right? And again, here's what you and I both know. There is no way in hell that NAR board of directors or the lobbying committee over there is talking about, we should take a look at the 30-year mortgage. Is it time to maybe start lobbying against it? You and I both
Well,
know.
we don't have any clout in DC anyway.
Well,
They could talk about anything they want. We've
sure.
lost all our clout. That's
But
a
you know what I
different
mean? Like,
episode though.
That's it's just not even
What's the
thinkable.
average down payment for the first-time American home buyer, question mark? I'm just curious
Yeah,
because
that's right.
if we're gonna advocate for it, we have to know the data, and that's one thing NAR totally gets credit for being
Yep.
good with the data. I
Yep.
love our library staff,
Yep.
love our research staff. It's asking, I don't want the typical. I don't want the minimums. The average first-time buyer puts down around 6 to 7%. Repeat buyers tend to put down more, 15 to 20%. This is as of
Yep.
NAR data 2023. So we know that the repeat buyer is using equity from the first house, which is my argument for the 30-year fixed, because if you get in with 5% down and then your equity does grow, that person is putting a larger down payment down the next time. And I've seen buyers do this in my 25 years. They have rolled up their equity until they get to the point where they say, made enough money, got cash. Oh, you just paused? Okay,
Yeah.
so now we're gonna, okay.
Okay, now we're back.
So,
Yeah, sorry about that.
so, okay, so then to reset, I'm looking at the 30-year fix then as an entry point, but not a forever point, because it's a pathway provided you use the dollars correctly, which still inflates the system. And I see you're inflating the system, but I still know that with the buyers I've worked with, Rob, if they're waiting to pay cash for a house, they won't get one ever.
I agree. Look, so what I'm saying is, even if house was affordable, it's 3 to 1, right? Even if, right? Like, to think about, like, you have living expenses, right? We go make $50,000. You're gonna spend on rent, you're gonna spend on food, you're gonna spend on whatever. And the question is, how much
Well,
could
you're
you?
going to have your taxes are going to eat up half your
Exactly.
money anyway.
So the question is, how much could a young couple, right? Let's say making 100,000 a year, both of them working, they don't have kids yet, right? And they're both entry level 60,000 a year jobs, right? How long would it take for them to save up 3 times another $360,000? You and I
They
both
won't
know
get
it's
there
it's a decade, maybe longer. Like maybe it's
if
never,
they're savers,
if they're
if
right.
they have a mindset to save.
Right. If they say we're going to buy a house, so we're going to start saving, it's 10 years. So look, I'm saying even if housing was affordable, like 3 to 1, there's a place for mortgages. So I'm not, I do think this is where I'm not 100% on board with Richard Warner, right? That there is a place for mortgages. Maybe there's no place for banks lending money to hedge funds so they could go to stock purchases. Maybe that needs
Also
to go
fair.
away. But look, the average worker trying to buy a home, trying to buy a car, there is some sort of right room for that. The question though is, should that be 30 years guaranteed by the government? In other words, if that didn't exist, and here's the piece that you or I were sort of arguing about the pre-show. It isn't as if Americans didn't homes before 1940 or before whenever the 30-year fixed rate mortgage was introduced, before GSEs, right? They owned homes. It isn't as if Canadians and Germans and Brits don't own homes, and they don't have government guaranteed mortgages, right? I think Canada is the one that most, I think it's like 5-year terms and the rate
Well,
resets.
with the news this week, let's just go ahead and not be anything like Canada. So I just,
100%, 100%.
America's evil top hat is showing its colors right now. It's so bad.
But I'm just pointing out, like, people will, like, banks, independent businesses will make mortgages available if they're going to make money on it. So banks will do it, even if they don't have the government guarantee, right? Even if they don't
Okay,
have,
so
right?
that's in a market where you have the assumption of asset protection, which would also be known as appreciation, because they don't want to lend on a declining asset.
But
The
that's
only
not
reason
true.
banks lend on cars, they lend on cars because they are a declining asset, but they're in use and they know people have to have them. There's a utility factor
Same
there.
thing with houses.
I don't know. And so if
Now,
you
house has land
all right,
value, right?
all
There's
right,
that.
you want banks to lend. Hang on. Stop where you are with the GSEs. So if the banks are backstopping your mortgage, they feel confident that the asset's going to appreciate based on the system they built. I get it. If you take away the backstop, the market's going to fall. Why would banks continue to lend in that transitional period? So you're going to destroy the market while there's a level set The banks
Right.
don't risk anything because they know it's risky, so everybody fails. And then my mind goes to that. You've seen The Short, right?
Hmm.
Arguably the best movie made about the Great Recession because it was understandable. But there was a fact made in there by Brad Pitt's little character where he talks about how, with the decline of house prices and with the increase in foreclosures, your suicide and death rate go
That's
up
right.
because of
That's right.
despair. So the question that I would add here is, right, no matter what we think of it, if we're agnostic about the future of the 30-year fix, any big change you would make has a transition period. Are we willing to sacrifice lives for the
Right. Right.
30-year
Right.
fix?
And this is where I think our angle is so important. In other words,
All layered.
I think like I at this point I'm agnostic about everything. 30-year fixed rate mortgage and stuff. Like, I mean, agnostic about everything. The only question that dominates is what is good for the nation and its citizens. So you're right.
Yeah, debt is not
If
good,
right,
but
suicide
private
is
property
bad.
or ownership,
Right.
suicide is bad.
Alcoholism, suicide, divorce, these are all bad, right? So
Assassinating your political opponents,
is
bad.
bad. Yeah. So
Certain things are very clear, but property ownership is good.
right. So we want to
And that's how
encourage
the
that.
founding fathers designed this. That's why it's in the Fifth Amendment. And I swear to goodness,
Yep.
any of the 45 viewers of our show need to be Fifth Amendment absolutists
I,
if we're going to
I'm
be absolutists about anything.
I'm a Second Amendment absolutist, so you know I'm down with the
Well,
Fifth
I am
Amendment
too.
absolutist
The Second Amendment allows us to protect the Fifth, which is
and the
why you
first.
have
Yeah.
castle doctrine and stand your ground. So
In any event, all right. Well, like, no, you're right. So this is why I think this is not an easy question, right? And I'm not
okay,
even
so then
arguing. Like, if you say no, the 30-year fixed rate is awesome and it's great for the country, I don't know that I even argue or disagree with you. What I want though is to make the case that it is good for the country and its citizens, right? That's what I'm
it's
getting
good
at.
for the country because the person who does not come from a background of homeownership, that's the
Hmm.
hardest person to get into homeownership, not because they're not qualified and worthy, but because what you see growing up determines to a large effect what you become as an adult. And
Hmm.
people might want to fight about that all you want, but kids from divorced families have a harder time with relationships. That's just a fact.
Hmm.
So if you look at home ownership, those of us that had parents that owned houses, oh, of course I'm going to own a house. My parents went to college. Of course I should go to college. It becomes natural. The
Right.
person whose parents changed apartments every year to 2 years had no stability. Home ownership feels wildly foreign to them. So if you have a 30-year fix and you can say to them, look, you're going to pay $2,000 a month in rent to somebody else, or I can get you in a house for $1,800, and it might move and change based on property taxes and insurance, but that rent's going to do this every year. And that 30-year fix means you can count on this so that for the first time in your life, you can have stability. For the first
Hmm.
time in your life, you have a payment you can count on, except for taxes and insurance. For the first time in your life, you know where your kids are going to get off the bus. You know who your neighbors are. The
Yep.
grass is yours. The tomato plants are
Yep.
yours. And so the 30-year fix is the entry point to stability. And then for a lot of people, they look at this as I'm in the game now. Now they're on the ladder. They're not looking at other people climbing it. And so it's a game changer, not just for them, but for the generations behind them. And so to me, the 30-year fixed is worth having the government backing for that person to do something they were already capable of, but they didn't have a chance because, all right, if the banks are doing pure committee shelf lending, which they all have private portfolio lending, which typically goes to
Right.
their buddies and to bankers and to the board of directors. If the banks are doing direct lending to somebody minus a government backstop, they're going to give me a loan. They're going to give you a loan. Are they going to give a loan to the person who's jumped from house to house and doesn't understand home ownership? Are they going to evaluate them in the same way? I don't know, but their
Right.
asset class probably doesn't look the same as somebody who was trained up in that way.
I think that's a really strong argument, Lee. But so the only counter to that I have is this. The challenge now is not mortgages, in my opinion. The challenge now is the price of the asset, right? You mentioned like the first time home buyer, the average first time home buyer puts down 6 to 7%. Right. I was a first time home buyer. We did the same thing. We put down the minimum because in order to do that, we had to
Because you
go.
could.
No, in order to do that, we had to go plunder the 401k, like liquidate all our savings, eat ramen for 3 months, like that's just the story. Like every, young couple, they're first like buying their shitty condo, it's like, you ain't got no money. All right, we're going to scrape together everything we can, borrow money from parents, whatever it is to make the down payment, right? Okay. So I just asked, the median home price in America right now, the median home price is $422,000, right? So in fact, that's the median. Fine, a first entry level home. I mean, you're a realtor. It's like 300, 350.
Well, in my market, I
Yeah,
can get you in a house for 200, 220. It won't be perfect, but I can
right.
get you into something.
Okay, fine. So let's call it 200, right? 5% of that is 10 grand, which probably seems like nothing to you and me, but that's because we're not 25. Like,
Well, and I was trained to save too. So
right,
I come from a
right,
farm family. You don't
right,
spend it in our world.
right. But
Different background. I'm not a swipe family.
sure, but I'm just saying, like, I remember what it's like to be 25, 26, it's just starting your career, just getting going. Saving $10,000 is no joke. It, it,
It's a
it's
year. Look, no,
it's no
okay.
joke, right? So
I
here's,
worked a second job to get my down payment because I was single when I bought my first house,
mhm.
and I worked nights waiting tables, which is
Yep,
also how I paid for college. And yes, I get it. College costs more now. That's a different episode. You want to talk about the effects of inflation? That is unfettered borrowing
100%.
with
100,
with no limits.
right.
That's way worse than
No,
mortgage lending. All right,
agreed.
so we're
And
not as bad as
and
that.
hold on. And as I mentioned, worker incomes have not kept pace
No, so you
because of
might
financial
have to work
repression.
a second job to buy a
Okay,
house. So if I look at what my daughter makes waiting tables, she makes $100 a night. So if you're working 3 nights a week, that's $300
sure.
because no tax on tips. Yay, President Trump. So then
Yeah.
add that up. Just say $1,000 a month. If I need 10,000 to buy, it looks to me like in a year,
In a
if
year you
I
can, right?
really want it, I could work the second job, not even 7 nights a week, stockpile it, and
Yep.
then be ready to roll.
Of
But
course.
the question is the desire factor and the perception of achievability,
No,
because I do
no,
think there's the messaging that says you can't buy is hurting
no,
buyers.
Lee. Here's the thing.
I I think it's
I think,
hurting them, Rob.
of course, it is. But my point is this: the problem with everything you just said. You're right. If you want to buy today and you're young and you're like there's a way, right? There's a way, and you could figure it out and save and all of that. That's all true. But the reason why this is such a critical problem for the entire country is because, like my kids, Gen Z, right, or millennials that I know, their resentment is that y'all didn't have to do any of that. And of course, a lot of their anger is to boomers because Gen X, we don't count. Like we're the invisible generation. I get that.
We're very small.
Right. But like it's so common to hear this all the time. Like, so I have to go work a second job and do all this stuff. What did you have to do? Right. You didn't
Worked
have
a
to do
second
shit.
job. My my
No,
dad
no, no,
my
no.
dad's a boomer. He roofed his own house to get into his house.
Look, I get it.
So
I
are
get
we
it.
not telling the story the right way?
But here's the thing: we're not telling the story the right way. But at the same time, if we were to tell the story the right way, the boomers were coming of age and they grew up in a pre-fiat money world. They grew up in a
True.
pre-GFC world. They grew up in a world where incomes were actually kind of keeping pace.
And you
Sonny's
could have a
dad,
one income
you
household
could
and
have one
maintenance.
income, right, and still like have a family of four and go on vacation. Like, I think Sonny's father, because my parents were not homeowners, because they're pastors, so they lived in church housing. I want to say she told me I think he bought his house for like $30,000 in 1971.
That's
That
a pretty nice house in 1971.
I'm sorry, $18,000. Think about
Okay,
like,
that's way more average.
but think about what I'm saying is, if you're a millennial, if you're Gen Z, and you hear that, time out, you bought your house for $18,000 at a time where the median income was 7 grand, right? Like we could tell them, yes, if you want to buy a house, you could do all these things, but the unfairness of that is what's causing the resentment, the social crisis. So fundamentally comes down to this to me. I think the Federal Reserve, no, Freddie Mac actually just recently came out with something, and it's been repeated over and over for a few years. They said, okay, how do we make housing affordable? There are three ways. One, incomes can double. In real terms, because it's not real, incomes can double, right? So the median income might be like 60, 70,000. So the median income will go to 140, right? In real terms, that's one way. Okay, I mean, how is that going to happen, right? Maybe after 5, 10 years of massive investment in U.S. manufacturing and whatever, like, okay.
Oh, isn't it just Andrew Yang and his universal basic income? Can't
Right?
you just have the government write checks like it did during COVID? Because
Right.
our young people think that's where the money comes from.
Exactly, because we've all been fooled for so long. So that's one way. The other way they say is mortgage rates could fall to 2%, right, to make it affordable. And then the third way is for home prices can drop by 40%. That would make it.
So you take away the supports so that they fall down, or artificially inflate it more so that people can buy artificially inflated goods, or force your companies out of business by enforcing price fixing on income. That was all in Atlas Shrugged, by the way.
Exactly, right? So it's a terrible situation. But if we look at it, so that's why I'm saying it's necessary to at least have a conversation about mortgages and the way that we
Okay,
do
so
them.
let me ask you a question then.
Wait, no.
Do you want to get rid?
No, before you do, I have a question for you because you're the working realtor
Okay.
and you're an expert.
Okay.
If the 30-year fixed rate mortgage went away, right, we would still have mortgages, but there are likely to be something like 5-year floating rate.
Oh, commercial loans.
Right?
Shorter max AM 20 years.
Something like that, right? Maybe max AM 15 years, right? Shorter terms. But so if that were to happen, what happens to home prices?
They would come down because your demand would be shifted of citizen buyers. But if you keep up the number of, this is back in episode 2, y'all, so go back and watch the other one.
Investors and
if you
foreigners.
keep up the number of illegals in property, and you keep up foreign investment, and you keep up hedge fund purchases, prices don't go anywhere. It's just the average citizen who can no longer buy them, which is against the Federalist Papers, against the founding of the country, and the most unpatriotic thing ever.
Possibly.
I think it's hand in glove, right? It's the only way you bring house prices down by changing the GSEs or changing the backing of mortgages is if you simultaneously stop hedge funds and Wall Street and foreign investors from taking up a large swath of U.S. real estate.
That's right. So let's assume we do something
Can't be one. You got to do both.
And it's a systemic process. It's a systemic solution, if you will. And I'm not even suggesting a solution. My point simply is if mortgages went to 5-year, with 20-year max amortization, like home prices will fall. They will plummet dramatically. Like there's no question.
They'll have to.
Right. Because otherwise no one can.
Unless there are supports on the other end from Wall Street. So I can't stop mentioning this because I do think the challenge of the house price that we're in right now is that there is a vested interest on behalf of the hedge funds and on behalf of Wall Street to keep house prices up because they've got it on their asset.
Yeah, it's not just hedge funds.
They've got balance sheets to protect.
It's not just hedge funds and private equity because here's the thing. Local governments.
Well, it's also the mortgage tranches.
Right. Local governments absolutely need home prices to remain high, right? Because that's how they fund themselves. I mean, NAR needs home prices high. Right?
But we should
eliminate property
remember that taxation is theft. Taxation is theft. Because I did mention that earlier. This is when I'll be an anarcho. What do you call yourself? An
anarcho-capitalist.
I'm very libertarian when it comes to taxes because I would be at war right now because I'm mad about the Boston Tea Party and it's only been 250 years. So we start thinking about it. What I mentioned earlier is you can have a 30-year fixed and you get rid of it because you are a dedicated saver and payer offer, and still you have to pay property taxes every year. So you never own your property. So it's all actually part of a big scheme to keep you from owning anything, which is absolutely not patriotic. So if NAR were patriotic and if realtors were, every one of y'all would be saying no more property taxes. And
That's
yay,
right.
Florida for chasing it for one,
That's
but
right.
it's got to stop everywhere. And then, of course, here's where the comments would come in if liberals were listening to us, which they're obviously not because they'd be
Correct.
mad at our comments already. But the argument is, but who's going to pay for your roads and schools, Lee Brown? Because
Yep.
property
Yep. Yep.
taxes pay for that. Okay, this is when I can get off the mortgage thing because we did have good infrastructure and good communities prior to property taxes, which weren't a big drain on society in, oh, I don't know, the first giant part of the American experiment. So
Sure. Sure.
there's a way.
Right.
It's all crooked. It's all corrupt. I'm very black pilled. Why are you black pilling me more?
I'm trying to white pill you. I think there's a
Oh,
solution. I think there, but you and I maybe not come up with a solution, but I think if we,
what's the solution? Is it a 25-year fix and you ease out the GSEs?
who
You let
knows?
Trump privatize Fannie and Freddie? Because I
Who
don't
knows?
know how that's going to play out in the
Who knows?
markets, but something's broken right now.
Like, look, I mean,
So we wean off of it.
I've made my proposals, which, in writing, it's called Madre, right? Make American Dream Real Again or something like that. Um, but like, I don't know that that's what I do think is that we can figure out a solution if, especially real estate people, because you guys understand the market so well. You understand like how it
We
works.
we get the push pull because we
Right.
live the push pull. It's the same
So,
way we have push pull on immigration. Can't help
right.
it.
Like I just imagine, just imagine for a second, right, that the NAR convention, right, happened in Houston, right, was not a whole bunch of committee meetings and meetings about how to use TikTok to lead generate. What if we're a whole bunch of realtors getting in a room and say, hey, how do we get housing prices under control? All
Oh,
ideas are out
staff
there.
will not allow that.
Of
Staff
course.
has to
No,
control the agenda.
I'm just imagining a new NAR that is patriotic and actually gives a shit about the nation and its citizens, right? And to say,
I do think
let's,
these conversations happen in the bar with the when like-minded people are sitting together.
right.
It's just you don't ever know when
You
you're
never
with
right.
somebody
So, but
like-minded.
I'm saying if you were to untap something like that, I bet that group of of practitioners or people really understand how things work might be able to come up with some really clever ideas, right? And so again, I don't want to distract us from like I'll just give you mine that I put out there. Mine was pretty simple. It was basically tax rental income at 80%, punitive taxes, okay, and then make any income from mortgages, make any income from purchase mortgages, right, tax free, and then make it a lot easier to do seller financing, right? So
No, I don't. I don't
hold
like
on,
any of that.
I understand, but my idea essentially was somehow convert, like in other words, the hedge funds, the investors, they would no longer have any incentive to go buy real estate as investment because they can't make any
Or
income,
yeah,
right?
me, I'd have to get rid of my properties. What's the point?
Because you would make more by becoming a lender.
Yeah, I don't want to be a lender. I don't trust people to pay me back
But you trust them to
because
pay you rent.
my tenants are tenants usually because of choices they make and have made. Some are tenants because they do not want roots, they don't want to own. They're
And they can
excellent
pay more.
tenants. And some people are tenants because they have no desire to build a different financial future because they are perpetually late and don't take care of things. And it's not, you never know what you're going to get until they move
Never.
in.
Like I said, this is why, like, it was just a random idea, right? I don't know that that's the right one. What I am suggesting,
See,
though,
okay, let me tell you why you're wrong. Because if you punitively tax me and I no longer provide rental housing, then you lose a huge piece of the rental market because it's mom and pop investors like me who are willing to buy B and C class buildings because I only buy C class. And then I make sure it's clean, decent, safe, and I make sure that my rentals are affordable. If you get rid of the mom and pops, you won't have affordable rentals in the marketplace because a punitive taxation model is going to mean that nobody cares about the missing piece of the market, and it's already missing.
again, I don't want to get into discussion of my specific weird ass proposal because we're talking about
You
mortgages.
brought it up,
That's why I
and
said
so
I don't really want to do it.
you have to edit it. Too late. You brought it
No,
up. You have to
it's
edit your
you know what?
proposal.
We could have a whole episode talking about Madre and why it's terrible, if you'd like.
Okay,
My
fair.
point simply though is if we got a bunch of patriotic realtors in a room and we pose this issue and say, okay, what are all the clever ideas we could come up with? The whole system's fucked. Leah's black pilled. Is there a white pill? Could we come up with a way that we could see. Like, you
That
know
would be
what?
so much fun.
Wouldn't that be amazing? And that's the purpose of what we're doing, like trying to encourage that type of conversation in every local market, in every
Yes.
real estate office. And is it going to help you sell a home tomorrow? No. Is it going to help you get a buyer
But
off
it
of social?
might.
No, probably not today. But you know what? If the reason why you are a realtor is because you've read the preamble, you're like, oh wow, this is about social responsibility and patriotic duty. This would be rewarding to get with your fellow like-minded people and go, what are some of the possible solutions, right? And to me,
Oh,
huge, great social change is going to happen with one little spark. You know, it's going to happen with three people getting together in a bar and talking about, hey, in our county, you know, this, whatever, this, that, and the other thing. How do we get housing affordable for young people? And I'm saying I want to engender that, right? So in none of this do I think I'm right, you're wrong, right? That's not the purpose of this,
that's how my mind works because
right?
I'm right and you're wrong. But anyway, you mentioned that the this doesn't get you business, and I would just point out that I see a headline like this came in today. Millennials are quitting the
Quitting.
home buying hunt as Gen Z steps up.
Sure.
The young ones are looking for what are the white pills? What's the possibility?
That's
How
right.
do I do this? What are the
That's right.
ideas? And so for the people who are willing to have interesting conversations where maybe an idea has merit, maybe it doesn't, but the two of them could spark a third idea,
That's right.
does tell the next generation that there are realtors out there
Who give
working
it
their
back.
way through it,
That's
which
right.
I think that's why people would call you if you have no answers. I'm not convinced that the public picks their realtor based on the slowly trailing hand across the granite countertop. I really think they're interested
Right.
in more substantive
Right.
conversations, which is
Right.
what we're discussing here.
Right. No, I agree. And I think this is something I've been advocating for a long time. And this, so
What are they saying about this? Why are millennials quit because they are just a sad generation? 9% of Gen Zs are looking for a house. 7% of millennials and Gen Xers, our people are only shopping for investment properties this one. This came out of Axios, and so they generally lean left, but not
yeah,
all the way left.
yeah,
Let's see. While homeownership is still a top goal for many Americans, that's encouraging. That helps my black pill. Buyers now have to make over $50,000 more per year than renters to afford their housing payments. I think you can cook that statistic however you want to because I know how expensive the rentals are here and I can get somebody into a house for less. And so, unless we have lending standards that are messed up, which is part of the process, I, I think people can afford more than they realize, but they've been reading too much.
like I
This
said,
was now, guys. I saw this on the news the other day. Did you see this headline? I was watching Fox Business, and it said, and I know they're mainstream crap too, but according to a new report, the American Dream now cost more than $5 million. And so I saw that on the Chiron, and I'm
yeah,
like,
yeah,
okay, that's totally cooked to scare people because it says that includes the cost of milestones
hmm,
like home ownership, retirement, raising two kids,
yep,
and obtaining quality health care. So I'm like, okay, that's you're making it look like
right.
houses cost $5 million when I can get you into it for 200. So I'll go back to the beginning of our conversation. How much of this is messaging? And it could be messaging about the 30-year fixed, who it's good for, who it's not good for. Should we be talking
No,
about 15 to people who can afford it?
no, I don't even
Everything layers into messaging, Rob.
everything
Everything.
there. No, but I don't think it's a messaging issue. To be honest with you, I think it's a reality of the fiat money system that we've been living in, right? Like it's just like I said, the issue is because you're just pumping money into the economy, whether it's through consumption or through right, it
See,
through
but
asset
that's messaging
purchases.
too.
But it's
Because
not.
the
That's
only
just
reason
reality.
people are clamoring for a lower interest rate because they don't understand fiat money because it was never explained to them
Of course,
by our broken educational system. So
but
that's all
that's
messaging
but
too.
that's not
If they
messaging.
understood,
No, Lee.
no, but if they understood the cost of low interest rates, they might not clamor for it. If millennials understood the long-term impact of home ownership, they might want to attain it, but they're not seeing
No,
what
no,
they've not been
sure.
told.
But you're talking about some, in other words, like you're saying, hey, if people really understood about, the Federal Reserve and how it's created and what it does and banking creates money and all, like if they understood that, then they would advocate for change, right?
Audit the Fed. That's the other hashtag. I
Right.
mean, They
Yeah,
would. I think people
they
would
would.
advocate to audit the Fed if they knew how broken it was.
But none of that has happened. So I'm just simply pointing out for the last 80 years, we've been living
So you're black
under.
pilled.
I'm not blackpilled. I'm just recognizing reality of the last 80 years. This is the monetary system that we've lived in. And therefore, we are now coming to the end result of that system, right? Which is everything price wise looks like this and wages look like that. It's that simple, right? Like none of these are problems, by the way, if wages kept up with asset prices. Think about that. And I think there was a study. In fact, I'm going to look it up. Since COVID, right? What happened to house prices?
They're stupid.
I know. Like, do you know what percentage?
I actually, it was like
It was like
60 something
50%,
percent.
60%, something like that.
Yeah,
Right?
64% in my market, maybe. It doesn't,
Right.
like I talk to young realtors and I
Okay.
can tell them that
Here's
25
Grok.
years ago, if I had a buyer with a $75,000
Right.
budget, I could
Right.
get them something in a decent area.
So here's what Grok says. Since COVID, since Q1 of 2020, home prices have risen 25%. That's what they're claiming, right? In median, national median, right?
Okay, national median, because you
Right.
got high tax areas like Syracuse that haven't gone up that much.
Oh, right. So national median is 25%. Okay, here's what I know for a fact. Income did not rise 25% since the start of COVID, right?
Well, for some realtors, it did.
Well, for a blip, and then look at where they're now with 4 million
For this
transactions, right?
many,
Right.
right?
So, let's end with that final piece, right? I think more and more realtors are starting to become aware of this, right? Starting to become aware of it.
They better be.
No,
Their
no,
future depends on understanding it.
and this is a messaging problem. When people talk about the housing market, economists, real whatever, people in general, they're looking at the price, right? They say, "How's the
Agreed.
market?" Well, prices are up. They're looking at the price. I think more and more realtors are now starting to realize it's not just the price; it's also the units. Because who cares what the price is doing if the number of sales are down to 4 million, and that is the
Hmm.
reality. And people are like, "Okay, that's cool. The home prices are up 4%, so whatever." But my transaction count has now gone down by half. Guess what? Your income is now half. And I
Hmm.
think more and more people are starting to realize high prices are not actually necessarily good, right? We need more transactions. In fact, I would argue if we half the price and double the transactions, it would be better for realtors.
Oh, it would definitely be better for realtors, but it would not be good for the people who bought and have invested in their properties. And so when their
Right,
property values come down, they
right,
are hurt.
right.
And so I'm not willing to say that it's better that realtors do better at the expense of the public. But what is the happy medium? Well, if we start with mass deportations and see what that does to the market, then maybe we make an adjustment and you go from a 30-year to a 25, but definitely no more than 30. So we can hit that stride right there. But I will say this to anybody that's watching: stop clamoring for lower interest rates. You are asking for problems in the market.
So, like I said, it's not like we're going to have solutions, but I wanted us to do this conversation again in order to sort of try and model what I think the conversations need to be, right? Like if you're a
Yeah, because we
local real
promised on
association,
X that we would talk about public zoning. We'll have to do that next
we
time.
will have to,
We
but
forgot to talk about local zoning.
here's what I imagined, right? So I'm trying to put myself in the shoes of like a local association executive, right? And I've been to so many of those board meetings. Like, what does a local association do? What does your local association do? They talk about training and education in these member meetings or what. Look, like, just look at the calendar. It's typically stuff like we're gonna have a golf tournament, to do a fundraiser for RPAC. We might have like the good ones might do. We're gonna do like a Habitat for Humanity Day or something, or it's a lunch and learn. Come and listen, some title rep talk about whatever, right? Maybe some random consultant, like people like me. Maybe it's a motivational speaker like you coming in, and I'm like, okay, no, that's all fine. But imagine if a local association, if I'm a local AE, I say, you know what? I'm going to have a membership meeting to talk about how do we get housing affordable? Let's hear your ideas. and have this type of conversation, this type of debate. Look, we respect everyone's opinion, right? We want everyone to speak and like put this in because you're going to bring a perspective of, but I'm a landlord. I provide housing for my local, people. You don't want to hurt me. Maybe it's like, but my retirees, they're going to get hammered. Let's get all of it in the mix. And here's my point. If done right, I think those meetings would be the most rewarding meetings the members could attend.
So
That's my take.
this is what frustrates me because and I am the loudest defender of professional realtors out there. I will go to the mat for my people. I believe in the people who chose real estate. If that was the title of a forum, they're not going to show up. However, if I can get them in the room and then we go to that conversation, I think they would show up for something like Amazon's getting into real estate. What next? Because if you get them to pay attention to something they feel like they understand more and they show up, because my concern about housing affordability, we're not attracting people into the conversation because too much of the conversation has been pigeonholed by the people who believe housing is a human right and it's not. And so the conversation's been taken over by ideologues instead of saying, all right, you're all professionals in this.
Right.
You do have a space, which means that at the core of it, NAR and the states and the locals have got to let conservative voices speak again because they've been quiet for too long.
Sure. I mean, of course. At the same time, this is not a conservative, liberal, whatever issue. This is.
I didn't say it was a conservative,
So,
liberal issue, but if you don't have all voices in the room, you can't get to that point of, here's an idea, how about this, how about this, so that you can get a broad spectrum.
Sure.
Because we have systematically shut down one side of the conversation.
Of course.
We're not getting the full spectrum of ideas.
Of course.
And I bring that up because I enjoy my liberal realtor friends. They've got some really interesting perspectives and ideas. Love hearing it. But how many conservative ideas are in any room? They're afraid to speak or they're not there. And so for the 46 people listening to this, if you want to see these forums happen in your local association, tell your association exec, tell your board president, tell your president-elect, because they're setting up next year, be the one that will spearhead it. And call it Amazon in real estate if you have to get them in the room. But the organization to have conversations like this, Rob, has to welcome all members back to the table.
Of course. Of course. And at the same time, like I said, I would love to hear from the lefty realtor who thinks housing is a human right. But
I want to hear why.
Well, it's not a why. No. It's even more than, and this is the theme of our entire podcast. I want you to tell me how housing is a human right is in the interest of the nation and its citizens.
Okay, fair.
Right? Everything you bring out, just that's fine. Whatever idea, I'm willing to entertain it. You just need to explain why, in your view, that is patriotic. Right? Because if you tell me we need to have illegals buy houses, you're going to have to explain to me how that is good for the nation and its citizens. You really are. Like that's my gate, if you will. And I do think that a realtor association could and should say, hey, that's an interesting idea, but that's not patriotic. That's actually that's against the interests of the nation and citizens. So exit, please, right? Or rethink yourself. You could be liberal, you could be conservative, you could be whatever, if we're all motivated at the same core thing, which is what is in the interest of this nation and its citizens. That's what I think that would make this forum so interesting, so entertaining. Right. And I think
I can't remember, is it Federalist 54 or 56 that talks about property ownership? We might have to do an episode on the Federalist Papers that go back to this because it's a pretty intense conversation about real estate at the American founding, which is why patriotism ties to it. So maybe we can give a little more background on that.
That's right. And here's the thing.
Every time we just got to keep saying that. Is this patriotic?
That's right. And you know what? Chances are the men, and let's face it, it was all men, who created NAR in 1908, they were probably far better acquainted with the Federalist Papers than we are.
1,000. They would be upset that I don't know if it's 54 or 56.
Exactly.
Instead, I'm over here
Exactly.
like, haha, I know something.
Exactly. Those guys could probably quote, federal is whatever, 54, 56 of it. So in any
They
event,
weren't
all right.
singing a song of Hamilton. Like, no, he actually was a brilliant guy, wrote things down. It's not a musical, please. Thank you.
All right, let's wrap there. Be interested to hear from, the people who are starting to listen to us, like, what do you guys think? What topics are on your mind? Because again, our whole point of this is conversations about issues through the very particular lens of what is in the best interest of the nation and its people. Because that's who you all are, Sen. And I do want to address that at some future episode of like practicalities, because I wrote a post on my Substack, and I'm having a very fantastic, interesting conversation with a local association exec. I'm like, oh, I see. There's some practical things here that we need to get into. In any event, with that said, thank you all for listening. Just to be real
Share with a
clear,
friend.
share with a friend. None of us are, proposing something happen mortgages or anything. It's just we need to have a conversation about it through this lens. So please go have those conversations with your friends, with your colleagues, and let's try and get more of this happening throughout the industry.
Yeah, go beyond the talking points.
Absolutely. Absolutely. Thank you all. See you, Lee. Bye.